important too. Well, let's get straight to our first management then. It's a premium innerwear brand, Doll Industries. The company is optimistic of cotton prices easing and expects to see margin expansion in FY24. Well, let's get the managing director of the company on the show, Mr. Vinod Kumar Gupta. He'll be joining in to tell us about the business outlook. Hi, Mr. Gupta. Morning. Thanks so much for joining in. Well, raw material costs have cooled off. I understand that, cotton prices have come down quite a bit as well. Could you tell us what kind of a gross margin expansion are you factoring in? And when does it start reflecting? Because you'll be having some high cost inventory as well.
Good morning, everyone. Well, this is correct to say that the prices of the raw material have started easing out. But then that has eaten away all our margins in last financial year. Because of we were holding the high cost material into our godown and that were being sold at the current market prices. Right now, again, the prices of the cotton had started getting corrected in the first quarter of this current financial year. And we hope to cover up all the high cost material in the second quarter. And by the end of the second quarter, we hope to have an easing out of the problem of getting the prices corrected. And we can have, can expect a good amount of margin to come in right from second quarter and then onwards.
Could you quantify that, Mr. Gupta? Because, last year you did margins of about 7%, which was much below the average mid-teens sort of margins that you would do earlier. If you could tell us what is the margin that you're aiming at this year, break it up into the first half and the second half of this year?
For this current financial year, we are aiming at an EBITDA level of 11 to 12% to close. And this will, maybe right now it is hard to say what has come up in the first quarter, but then overall margins to remain between 11 to 12% EBITDA level.
No, I meant the first half of this year. You said because up until the second quarter, you will see some, impact of high cost inventory that you're having. So I believe that this 11 to 12% expansion that you're talking about from last year will be back-ended. It will happen in the second half itself, right? So just wanted to know how low can they go before they improve?
Yeah, but then see, whatever EBITDA level was there in the last year, that was the lowest. We cannot expect anything going below that, and it should see upward trends now.
Okay, all right. Mr. Gupta, what about volumes? What kind of a growth are you looking at for this year? Last year, I believe you did around a 5% growth for FY23. So this year on that base, what's the growth likely to be?
This year we are expecting a volume growth of 10% and the total overall volume to increase by 10 to 15%, out of which it will be value based will be around 15% and then the volume growth will be around 10 to 12%.
No, so can you just repeat that number? You said your total, you're talking about the revenue growth will be 15%?
Yeah, I'm talking of the top line. I'm talking about
top line growth will be how much? 15%?
10 to 15% overall.
Okay, and you're splitting that up for us as well. How much of it will be volume and how much of it will be value?
It will be 8 to 10% volume growth and the rest is the value growth.
All right, that's clear. 10 to 15% revenue growth led by 8 to 10% volume growth itself. But a couple of parts of your portfolio, just wanted to talk about that. Athleisure, currently about a little over 12-13% of your overall revenues. If you could tell us how much will this contribute in your overall mix going forward? What rate is it growing at? And more importantly, what's the margin differential between athleisure as a segment and all the other products that you operate in?
Yeah, athleisure is really doing very good for the company. For this current financial year, we are expecting a growth of around 40 to 50% in the athleisure segment. Athleisure segment, the boost in the market is quite excellent. And of course, if you look at the margin prospects on account of athleisure vis-a-vis the other business, athleisure of course plays a very good role in forming out a good amount of margin.
Can you can you tell us the difference between the margins that you make on athleisure and all your other parts of the portfolio?
Yeah, it is a difference of around 4 to 5%.
4 to 5. Wow. All right. So stronger growth out here will definitely help you. So athleisure, saying that going by the pace of growth, By 2025, 2026, what kind of a contribution will it have to your overall scheme of things?
Yeah, maybe around 20% of the total
20%.
turnover.
Got it. All right. From around 13% as of now. You also wanted to increase your export revenues, right? Could you tell us where do you see that contributing, and is there a margin difference there as well?
Actually, margin difference is not exactly there in the export business. Margins is very good as it was doing in the past. The only concern is right now we were doing a good amount of export to Bangladesh and Sri Lanka. But then that has got stopped because of poor European market and the recession being there and very low amount of demand from European market. Because they used to procure the material of their requirements from Sri Lanka and Bangladesh. And because of recession in those countries, the business in Bangladesh and Sri Lanka is not up to the mark. Because of that, our exports have also gone down in the last fiscal. It was around 130 crore in 21-22. It has come down to 80-85 crores last year. Right now, even today also, the business in Bangladesh and Sri Lanka has not picked up. So once that picks up, of course, we will be able to do a good amount of business in exports.
All right, we'll await that, and we'll also await the FTA once the India-UK free trade agreement is signed. Perhaps it'll be easier for you to go ahead and export to those countries. But we'll talk about that when that happens. You're currently working on a distribution model. You know, it's called Project Lakshya. How many distributors are you targeting in FY24? You added about 229 in the previous fiscal. And what does that mean for incremental revenue for you?
Yeah, for this current financial year, we have our target to increase the total number of distributors under Project Lakshya to 300. We have added few more states to come up very recently. And once this Project Lakshya is really doing excellently in terms of increase of number of retailers, outlets, they are getting registered into this project. And we understand that this increase in number of distributors in this current financial year will really help in achieving the growth rate of 10 to 15% in terms of value and volume both together in this current financial year.
All right. Thanks a lot, Mr. Gupta, for joining in and giving us the business update. 10 to 15% revenue growth is what you're targeting. Almost 20% of your revenues coming in from athleisure in the next couple of years, adding or looking to add close to around 300 distributors in this year itself with 11 to 12% margins for the entire year. That summarizes the outlook for this year, and the stock virtually unchanged currently. But with that, let's shift focus to our special segment where we get you a few